Good morning, everyone, and welcome to Investor Days, where we have 17 companies presenting today. We'll start off with Gaming Innovation Group. My name is Oskar Rundqvist. I'm an equity research analyst here at ABG, covering the iGaming sector. With us here today presenting, we have Hessi Mokka, who is the head of investor relations at Gaming Innovation Group. So the scene is yours, Hessi. Please go ahead.
Thank you for the great presentation, Oskar. As Oskar said, my name is Hessi, and I'm head of investor relations for Gaming Innovation Group. And I want to talk about the company in brief. We are a gaming company with three main pillars. One is the sports betting pillar, one is the platform pillar, and the third one is the media pillar. I will touch upon every of those three pillars in the future. We are today approximately 600 employees. We have offices in Malta, France, Denmark, and Spain. We have 25 global licenses on our platform as of today, and 10 more is to come before the year ends. I will touch upon that as well. So this is the three pillars that is standing for Gaming Innovation Group. The first pillar is the platform business, which is a B2B platform for our clients. It's a full range of services, everything from CRM, front end, to player account management, to wallets, game aggregators. So we have this solution for every operator in the world. So this is a very high technology platform that we have built during the last 6 or 7 years. Next pillar is the media pillar, which is a lead generator where we send traffic to our partners, which is all the way from Betsson to Bet365. We have comparison sites where we compare every offering out there, and we send traffic where we get money when the player makes their bets or plays for the casinos. And we tend to go for rev share deals with them as well. And the third and last pillar is the one we acquired in 1st of April, which is Sport & Co. We acquired it, and it's an end-to-end sportsbook solution, and they have been proving very good during the last 10 years with the track records. And so far, after approximately 45-50 days, we've seen very good improvements in both sales pipeline and what they have created. And we're looking forward to this collaboration to start paying off as well. So very, very happy with that acquisition. Moving forward, this is just a little bit of our numbers. As you see, we have increasing revenues the last 6 or 7 quarters. We're very proud with our results. And this year we had in Q1, 90.1 million euros in revenue and 6.5 in EBITDA, and a very good growth on EBIT to 2.9 million euros. With the addition of Sport & Co, we will like to increase those numbers moving forward, and we're feeling very optimistic about our future. Gig strategy. So we're moving more and more into a regulated environment in the world with taxes and regulations, and even B2B licenses and B2C licenses. So our focus is most being a broad geographical company in regulated markets. We try to have a diversified portfolio of clients in every area of the world. And one of the biggest keys that we are looking at now is to have so many market access. So as of today, we have 25 approximately, and end of the year we'll have around 35 licenses for our platform, which is it's a very big number, and it's very interesting to have this because we can start cross-selling clients from market A to market B, and therefore have a higher contract value per client. So that's something we're very fortunate to have, and that's what we've been building for the last 3 years. We're also now with Sport & Co having the biggest sports betting. Sports betting is the biggest business in online gambling, and now we can target sportsbook only markets and sportsbook only clients. So that has more than doubled our potential targets for clients. So we're very happy with that as well. And with the media business, we want to move that faster, invest more into link building, more markets, create more web pages like we have done the last 2 years. But now with our economy being on a stable place and we're able to invest more, we should see the fruit of the labor coming in the next quarters and the next years to come. So very happy with that. And overall, we're in a place where we know what we want to do and where we want to invest. And we're moving forward with that plan. Just to touch up on a little bit briefly with Sport & Co. As I said, we acquired it 1st of April, and it's a tier 1 sportsbook and in regulated markets all over the world, predominantly in Latin America and Southern Europe. With that, we are now able to see a lot of synergies moving forward, and we will have, as I said, the sports betting, which is the biggest in online gambling, and we can target those clients as well. So that was one of the key pillars for us to buy this company, and they have a very good track record, and they have a very big clients as in Betway, Sisal, NetBet, so on and so forth. Some strategic operational performances. We're looking to increase scale, addressable markets more than doubling with this acquisition. We're having a tier 1 sportsbook. We're seeing already cost synergies between those two companies, and as we mentioned in the Q1 report, we're seeing cost synergies annually around 8 million euros, which is a very big number, and we're very happy to see that with them we're able to have operational excellence. We're able to target new markets. We don't need to have our own team moving into new jurisdictions. Now with Sport & Co, we have covered the most grounds as of today, and of course there's new markets we can also enter, but we have 35 markets at the end of the year, and we're very happy with those markets, and we can sell upon those markets as well. And here's a little bit touch upon our existing and in progress with the platform jurisdiction, and here you have footprint of where we are and some of the markets we're going to enter before the year ends as well. So as you see, we're very diversified, and it's not one market that sets the tone for us. We're very broad, and we don't have any client that is standing for more than 10% of our income as of today. So very good to have this geographical spread, and I think it's very important to have that moving forward if any markets seems to be hard to manage or new regulations come in place. Year-to-date platform agreements. This is something that has been spinning up since we bought Sport & Co. We've been able to sign Betsson for a new contract extension, which was a big milestone for us. And that's it's big in certain different ways. One, it's commercial big. The second part is that one of our biggest moves moving forward is to take tier 1 clients into non-core markets because we have licenses in those markets and we're fast-footed, and we have a very good offering, and our platform is a tier 1 platform. And with our contract extension with Betsson, we proved that our strategy is moving well ahead, and very happy with that. We signed a full turnkey solution for a big tier 1 land-based UK retail casino, which is a significant contract value for us going live before the year ends. Very happy with that one. We also extended Sky City, which is one of our largest clients as of today, with the current contract until May 2025. Another big milestone where we took the biggest land-based casino in New Zealand. We've had them for a couple of years, and now they've signed a contract extension for additional 3 years with same contract. Betway, a very large client who's now taking their PAM and sportsbook into Portugal. It's a second market, and we look into having this kind of contract, as I talked to, taking one client into additional markets. So therefore, we can get a higher contract value for each client. We moved into a regulated African market in Angola, full game. Very interested to see how that plays out because we're making now moves into Africa, and Angola has 4 licenses as of today, and we have one of them together with full game. And from previous expertise and knowledge, we've seen that closed markets as Angola and other markets that we've seen, it's very high value to have 4 or 5 or 6 licenses, and we're very happy to have that with. It's a first combined offering as well with Sport & Co. So they're offering their sportsbook and PAM, and we're doing the managed services. So it's a full suite package, and hopefully that could be a very valuable contract moving into the future. And the one part I'm very happy with is the combined sales pipeline. More than 40% of the offerings are combined as of today, where we either sell their platform or our sport and our managed services, or it's our platform and their sportsbook. So we're very happy with the first 45 days of the integration. I won't go so much into details with numbers. We have the numbers in Q1, but this is a graph I really want to show. This is our media services for LATAM and North America. It's a project that we started in 2020, and it's starting to generate revenue for us now. As you've seen, we're increased from 0.8 million euros from Q1 2021 to 2.3 million euros in Q1 2022. And that's something I want to explain to the market, is that when we start doing something 2 years or 3 years ago, it starts to pay now due to us being we're only going for revenue share contracts. So the fruit of our labor will come 18 to 24 months later, and this is a graph showing that. And hopefully this could pick up and continue moving forward. It's a very interesting market in both LATAM and North America. Our media revenues from America has increased by 200%. And another important key is we also have a pillar where we want to defend our more mature market, like the Europes and Nordics. Despite that, we've increased our revenue with 36% year over year in our more mature markets, and the revenues and those revenues declined due to our other revenues growing faster. So now Europe and the more mature markets are standing for 60% of our revenues in Q1, which is very good. We want to diversify our portfolio even in media and move into the whole world moving forward. And this is another part of the business where I'm very proud of, is the platform services, where our platform brands in the SaaS is now up to 25 clients, and we're increasing them going forward month by month. And this is a long tail business. It's very sticky. We have a very low churn, and with our clients picking up their pace, we see the revenue share growing, and we want to keep expanding this and move forward quicker and faster, and onboard clients faster as well. That's the part of Sport & Co coming in now as well. We can focus on just integrating and not focusing on licensing and other stuff like sportsbooks. So it's been a very good complementary fit for us, and we tend to expand this SaaS business significantly moving forward in the next 12 months. Events after the quarter: acquisition of Sport & Co done 1st of April. We've signed 3 clients, as I mentioned before. Our sales pipeline is remaining very strong, and we have both in PAM and Sportsbook only clients. We're targeting North America in a more aggressive way due to Sport & Co acquisition. Our first-time depositor grew by 70% year over year in the media business, which is very good, and we're overall very positive moving forward in the media division. We're adding additional markets, new products, new services for the future growth. We won the best casino affiliate at the ABGSC Awards, and April has developed very positively, and revenues were up 42% compared to last year in a trading update, whereof 28% was organic growth. So a quick summary before we move into Q&A. We delivered all-time high revenues with a strong double-digit growth, both on revenue, EBITDA, and EBIT. Media is performing exceptionally well, and one part of that I'm very proud of is our revenue share based. Our revenue share clients are standing for more than around 60% of our revenue, and if you look at our competitors, most of them are down under 30 or low 30%. We think the strategy of moving into revenue share is you don't get affected by seasonality that much, and you have a longer tail of income, and therefore our data is saying that it's better to have revenue share based. And with us now moving into US, and we're adding revenue share contracts in with operators in US as well. So we're tackling the US market in a different way from our competitors. We think that revenue share is the best way to move forward. We have our platform is showing positive development in number of SaaS clients, and our revenues will follow thereafter. And we have proven with the contract renewal of SkyCity and Betsson that our strategy is working. And with us taking the full turnkey solution of a land-based UK client, we're hitting the KPIs that we want to do. And our post-merger integration plan to create meaningful revenue and cost synergies are already on the way. And as I mentioned, we are targeting across around 8 million euros in cost savings annually, which will hit our EBITDA margin in a positive manner, with us increasing revenues as well. So very happy with our performances, and the team has done a really good job. And that's all for me, and thank you. I'm moving past the mic to you.
All right, thank you for that presentation, Hesse. I will continue with some questions. So at first, just on the Sporting.co acquisition, it looks interesting from multiple angles, primarily as you see, as you said, synergies from both cost investments and further client signings. So could you just expand on the outlook? How has the response been from the operators, which maybe you had discussions with before the acquisition with the previous sportsbook, which was a bit lacking, I guess?
Yeah, it's been how can I put it?
Better than expected.
Better than expected. I thought it would take some time, but we've seen already like a lot of our own clients wants to move to the new Sporting.co platform, which will increase contract value. We're seeing cost synergies. We're seeing cross sales, like with the signings of full games in Angola, and we're now able to. Our platform clients we can target sportsbook only clients, which has been very interesting for us as well. So we're seeing a lot of more activities in the platform, and we're seeing a lot of more interest, which has been better than anticipated. So hopefully we can start seeing that in the coming months and quarters. And yeah, it's been very, very, very promising so far.
And exactly. And as you said, you are live in 25 markets today.
Yeah.
And you're targeting 10 more markets.
Yes.
So how many of those markets were like in synergies with Sporting.co? And
we had just like two markets overlapping. So when we bought them, as a chairman used to say, we should always look for the local champions. And Sporting.co was a local champion in LATAM and in Southern Europe. So therefore, we didn't have so many crossovers when it come to licenses and existing markets. So the fit for us was very good. They had market access where we didn't have market access. They had strong offerings where we didn't have strong offerings, like the sportsbook, and we had very good platform and data-driven gig data and CRM and all the other stuff where they wasn't as strong as we are. So it was a perfect fit. And the first 45 days, the culture fit has been very good as well. So I'm very optimistic. I'm a little bit often afraid about large acquisition, but this has been above my expectations so far. So hopefully we can move forward and increase speed.
All right. And of course, one of the most talked about markets is North America. So, and it seems like your media business has started to get significant presence there now.
Yes.
But my next question there, how should we think about the platform segment in the US? How do you see your offering stands in relative to your competition?
We have very strong offering now, and we're targeting both US and Canada with full force now. So we have we think we have offering that stands out with us being regulated and in New Jersey, Pennsylvania, and moving into other states as well moving forward, and having both platform, online casino, and sports betting. We think that our offering is very strong, and combined together, we can take market share in North America as well. And we're looking forward to that the next 12 to 24 months.
Do you also see any like synergies of having a relationship with some large operators in the media segment to maybe cross-sell going live with in non-core markets in the platform segment?
For example, we're now we have a contract with PlayStar, which is going live in pretty soon, and there we have synergies where we're going to help them with media acquisition and targeting different strategies for them to get more clients into their platform and their online casino. So yes, there will be synergies between those two markets, because we have one of the best media, or not the best media offering in the world. So we're seeing some movement there as well.
Okay, yeah, and of course a lot of focus has been put on the platform segment naturally after the Sporting.co acquisition, but the media segment has been growing quite well for some time now.
Yeah.
So do you see like a change in focus internally to the platform segment, or do you remain optimistic in the media segment as well?
No, the company structure is they're 360 standalone. So media has been doing their thing the last 3 years since Richard took over. He basically had 2 different management teams, so nothing of the focus has been changing. Rather than we maybe have some more knowledge about the Latin American market now from the acquisition of Sporting.co. What times do they play, and how does the behavior of the player change from Europe to Latam? So I would say we will enhance our capabilities of growing media with the Sporting.co acquisition. So there is no shift in focus. The teams are hungrier than ever. Now with our cash balance being in a good position, we can invest more in different areas and structures. So yes, we're just scratching the surface with the media division. There is so much left to do. There is Latam, there's North America we can enhance. We're very small still in those markets. We want to increase those markets. There is the whole crypto environment. We have paid marketing we can enhance with the regulations coming in every market. You're able to have paid advertising, and as you see in our numbers, our paid advertisement has been very good and successful, and that's something we're very proud of. So yeah, we're just getting started, and we want to move and invest harder and faster in the whole world.
Okay, understood. So, and of course you did a large acquisition, but going to capital allocation going forward, what do you see? Do you see like further M&A? Is it anything that you think that you're lacking in your platform segment, or?
Of course, there's always new stuff and new parts we can add. But as of today, I think we're pretty happy with our offerings. It's a very big acquisition. It's a very big integration of 2 companies, even though it's been going relatively smoothly so far. We should probably just look at the landscape and start investing in those markets we already have license in, and enhance our offerings. But of course, we're always looking at the market and see if there's something interesting, even if it's in media or in platform or game studios or whatever it can be. We're looking at every possible way to create shareholder value, and if that's the way to move forward, we will look at it as well. But I think as of today, we'll probably look at integrating Sporting.co and get the maximal beneficial of that M&A.
Okay, and just next one, we have seen some B2B suppliers being acquired. Have you seen the competitive area? Has that changed over time? Is it less competitive now?
Yeah, because we're seeing SB Tech moving in-house with DraftKings, and there's a large opportunity for us to take SB Tech clients. If I don't remember wrong, is Betway was their supplier in Portugal, which we took from them. So there's a lot of opportunities now for us to take those type of clients. Either if it's, we've seen a lot of platform acquisitions as well. So yeah, we're in a very good sweet spot, and I want to just point out that with us having 35 licenses, it's a standout offering we have. We can move into multiple jurisdictions in a short period of time if a global brand wants to do that. So we're very happy with our offerings, and I think with us being regulated in so many markets, it's a standout offering. And with us now having Sport & Co, we will look to enhance our offerings and grasp more of the market in the future.
Okay, thank you very much. I think that concludes this session as we're running out of time. So thank you, Hesi, for that presentation.
Thank you,
for
Oscar.
listening.
Thank you, everybody. Thanks.